What is going on, Alpha Hunters? Hope you guys are doing well. The markets are closed for the week of December the 9th, and let's check out what the market did this week. I'm going to do my best here to keep it straight and to the point. So last week was definitely looking for a little bit more of a bearish case scenario. The bulls were really kind of wanting a continuation higher, kind of going into the beginning part of this week, push breaking above last Thursday's high. Obviously, Monday and Tuesday, the bears came right out and said no and just kind of traded lower. But once we got to the Tuesday low, we didn't really break below that for this week. So as you can see on Monday, nice little gap down, and then kind of just traded down. And this is kind of what I was expecting, but I thought it would happen really throughout the week. But this was wound up being the case just Monday and Tuesday. Really, Monday was the day of massive importance. We just kind of came right back down, a little bit of a pause here around that 402 level where the previous 2-3 weeks we had real struggles kind of getting through this price zone. And we kind of just got right through it, went right through the 400, got down to about 399, had a little bounce around in there. And then the day finally ended. Tuesday came and just continued to do the same thing Monday was doing. Pretty much a steady trend all the way down Monday through Tuesday afternoon. A little bit of buying came in on the day Tuesday. As we went into Wednesday, already a lot of bearishness coming in on Monday, Tuesday. You would expect we'd hit this wall at some point in time, just kind of stop going down. Well, basically Tuesday's low was kind of it. Wednesday, we just kind of just chopped around sideways. We didn't really do a whole lot on the market. And then Thursday, nice little gap up, trade lower, then trade back higher, and then chopped pretty much in about a 3-point range for most of Thursday. And that actually continued into Friday as well, and just kind of chopped sideways. Now, what was kind of interesting on Friday, even though it doesn't look massively important or bullish or bearish or anything except for the end of the day selling off, I'll get to that here in just a bit. But if you go to the extended hours pre-market, the futures were actually up pretty good, about 1%. And then the PPI numbers came out and they were a little stronger than what the market was looking for. And then there you go, boom, dropped off. So that was the pre-market move. Basically, the futures guys were seeing it. But if you were not really someone that pays attention to the futures, you didn't really see it all that much. And then the end of the day sell-off. Now, I'm going to talk a little bit about how important this was, what levels closing below, but this 394.64 level, which was basically right about here, this was very important to close under. And if we go to a daily, I can show you what day it is. It is this Monday. It's the Monday for the week of Thanksgiving, and it is below that open. Okay, so that open was 394.64. So if we go to a weekly and we look at this, what we have here, let me turn off all that stuff. Very nice evening star reversal pattern. One black crow also on a weekly. Yeah, this pattern looks tremendously bearish. Just kind of as we had a little bit of breakout higher, and then the bears coming right back in and selling that off. So not really looking like the market's going to continue higher. Next week is going to be a massive week to figure out if this was just a pullback and we're going to push higher, or was this the turn on this recent rally that we've been in since mid-October. So we'll find out this next week. Obviously, it's going to be a big week. The other really big importance that we had for the week was just all the technicals that we kind of broke through on Monday and Tuesday. Obviously, this upward trending line, we broke that, right? We broke that, and that is typically, whenever you break the trend, then the market's going to have to find its new trend, and it might hang out for a bit, but it's going to search, it's going to try and find a new trend. Typically, whenever you break a trend, it typically trends then in the other direction. So we'll see what happens, kind of how it plays out. But yeah, not looking like the bulls are going to continue for now. So we will come back and talk about that towards the end of the video, bringing in all the analysis that we're going to talk about, okay? So let's talk about the dollar, okay? And we'll talk about rates here in just a second. But the market is starting to fall, let's say, out of sync with the dollar. Okay, and what I mean by that is typically, as we've seen for the year, as the dollar's gone higher, and any kind of moves where the dollar's gone higher, especially strong moves or bearish moves on the dollar, the market's responded basically inversely, okay? Inversely. And really, we saw a little bit of a disconnect this week. Okay. So Monday, the dollar was up pretty good. Tuesday, the dollar was up pretty good. And we saw the market get absolutely smoked. Okay. Wednesday and Thursday, the dollar was down pretty good. We should have saw the market up pretty good, but we didn't really see that. Even Wednesday, even though we saw some buying come in on the stock market, we actually ended the session low. Really, the only positive day for the week was Thursday. Thursday was the only day we actually ended the day positive compared to the previous day. So the dollar getting a little bit weak here was kind of a telltale sign of the market not really caring too much about what the DXY, the dollar's doing, okay? And for the past couple of months, I've kind of been mentioning this, right? We're about at that period where the market's not going to care too much about inflation, rates, the dollar, those kinds of things, the things that have been driving a lot of this year. And it's going to go into the new thing that's going to start to impact the market. Most likely the economy, GDP, jobs, all that kind of stuff, earnings, a lot of that kind of stuff. So we're starting to see a little bit of that desync come out of the dollar and markets. Now, if we look at the rates really got desynced this week. Monday, rates were up a little bit, nothing major, not getting above last Friday's high, but they were up a little bit, but we still saw the market selling off pretty good. Tuesday, rates were down a little bit. The market was down quite a bit. Wednesday, rates were down quite a bit, and the market wasn't doing anything. You would have thought the market would have been a lot higher, right? But no, on Wednesday, the market was just down a little bit. So it's just one of those things that the market is starting to kind of find another kind of catalyst to push it around. And I don't think it's really going to be coming from rates unless rates really start skyrocketing again, really pushing back up and making some of these new recent highs or taking out these highs that we've had for 2022. I don't think it's really going to matter too much about what yields and the dollar does. And they might oscillate, they might impact a day or two, but it's not going to be like major trending moves. So definitely something that I don't know if it's really going to be something to really impact the markets going forward. So I don't know if we'll be talking about it too much on this channel if it really starts to impact things going forward. Obviously I'll talk about it, but I think we're just getting into that period and that point in time where yields and dollar are probably just not going to matter much, mostly because I think we've seen peak yields, right? Especially like a lot of 2, 3, 10, 15, 30, all that kind of stuff. We've probably seen peak yields. So there's not really probably going to be much to talk about there going forward. We need to find those things that are going to continue to impact the marketplace. Take a look at that inversion yield between the 2 and the 10. And we saw a nice pop today on that 10 and 2-year inversion yield. And what was kind of interesting about this, if you do look at the 2-year yield, it didn't really do a whole lot. It was really driven a whole lot by that 10-year yield. 10-year yield was a lot higher today. Kind of interesting, the 2-year yield, obviously you can see here, has been pretty flat for several months, several weeks here. And yeah, maybe the 2 years is going to have a little bit of a pause time, and maybe the 10-year comes and catches up. Who knows? We'll see how that kind of plays out in the future. But maybe we've seen the bottom of the yield curve inversion, but I'm not going to say anything for sure because, man, that thing has just kept going lower and lower as we've gone on for the past few weeks and months. Take a look at gold real quick. Gold had a little bit of a pop higher above last week's high and came right back down. I think gold might be a little bit extended. Maybe it comes back down. I would really like to see it retest into this 160 level. I would really, really like to see that. And maybe it happens maybe in the beginning of next year, like January, February or something like that. But SLV, the ETF that tracks silver, man, this thing has been on a tear. And I had Mr. Sub come in to the live stream this week and ask about this. And I think I might have made a little bit of a wrong call, maybe on the near term. And a lot of the things I was looking at is we have a really solid support and resistance level right here at 21. And we just got a pretty good close over it, second week in a row. I'd be surprised if this kind of holds without retesting lower, maybe back down into 20, possibly down into 19 over the next couple months. But yeah, if you can get any kind of pullback, I would definitely be looking to be bullish on some leaps. So Mr. Sub, if you do come back and see that, that's kind of what I am thinking. I'm not really going to change my mind, but I was just kind of shocked by the bullishness that we continued to see out of the SLV, the silver futures this week. Taking a look at the HYG high yield corporate bonds, right? Kind of been mentioning, these are just kind of moving a little bit too far off to the side here. We're not really seeing a very strong rally and bounce. The strongest move out of all of this bullishness that we've seen was really all the way back here in late October. But really, ever since then, ever since that late October kind of peak, we're only up like 50 cents. So we haven't really gone anywhere. That little breakout last week, maybe it starts to roll over going forward here. Really pay attention here, because obviously there's 20 exponential moving average, the 50 exponential moving average. They're really kind of holding this thing up. And if it gets back below some of these moving averages, that might be, it's starting to go back in that bearish direction. So definitely watch out for the HYG, and definitely watch out for the HYG if it starts to do that bearish move before the stock market. So definitely keep my eye on this one, and we'll kind of see what happens, especially over next week with CPI and the Fed. Now, taking a look at the VIX, the VIX. Yeah, obviously Monday, Tuesday, nice little pop higher. You'd expect that with how bearish we were on the marketplace. We probably definitely got a little bit overextended in that bearish direction last week, or kind of coming down last week. Last Wednesday, Thursday, Friday, we kind of mentioned it last week. These were just massive drop-off days in the VIX. And you could just see the amount of complacency coming in. And especially on like Thursday and Friday, especially on Friday, because we didn't really go bullish on the market, last week, where there was buying that came in, but we weren't like screaming bullish. It's not like we were back up into the 413, 414 type area. We had gapped down and just got bought up. So yeah, this dropping as low as it did was kind of a little bit of a complacency tell. And we'll see what happens with the VIX this next week. I would imagine this thing goes squirrely, especially on Tuesday, Wednesday, maybe on Thursday, but Tuesday, Wednesday, I expect the VIX to see a lot of activity. So let's not forget this next week, we're going to get two massively important factors. The first one, Tuesday morning, is going to be the CPI data that comes out, forecasted to come out at 7.3%. That's going to be the CPI for November, right? Tuesday morning, an hour before the market opens. So a possible scenario that we could see is, what if they actually raise the prior month's CPI, maybe raise this to like 7.8, 7.9, and then the actual then for November that's going to come out for Tuesday morning, what if that comes in at like, I don't know, 7.6, 7.7? It's just something that'd be really interesting to see, because the forecast calls for a pretty good drop off here. And a lot of that's probably based because of how much we dropped from the September release that came out in October, and then the October release that came out in November. So if they revise this up, and then it shows that we actually didn't drop that much month over month, and then what does November come in at? So if they revise October up, and then the actual that comes in for November is like 7.6, 7.7. I'd be kind of interesting to see how the market kind of takes that, because that'd be a lot stickier inflation than what we've really kind of seen coming out of the marketplace and how they've kind of been responding. But I'm not really expecting to see like, CPI come in at 7.1% or really be below the forecast all that much. If anything, I would expect the forecast to be a little bit on the low side, and we actually come in a little bit higher than that on Tuesday morning. But we will see how that kind of plays out. And then don't forget, Wednesday we are going to get then Fed Chairman Jerome Powell talking Wednesday afternoon. So yeah, Tuesday and Wednesday are going to be mind-blowing. If you don't like volatile markets, I would highly recommend just staying out of next week and just sit on the sideline, watch, go do some Christmas shopping, whatever you need to do. Or you're not good with volatile markets, definitely just stay out of next week, because that'll be a lot of volatility next week. Okay, so I mentioned last week I was going to talk a little bit about crypto markets, Bitcoin this week, and I'm not going to spend a whole lot of time here, but I do think that breakdown that we had early in November, that was a pretty big breakdown, obviously, but I did mention last week, anything back up into that 18,200 18,600 is going to be met with a lot of resistance, right? We have a lot of lows throughout most of the middle part of the year, in through even Q4. that have a lot of lows in that range. So I would be selling anything, any kind of pop that you get up into that zone. And I do think that we will probably retest into that zone. Now, I know that's a pretty wide ranging zone, but in relative speaks of the crypto market, or at least Bitcoin here, that's not that wide of a zone. But I would definitely be looking to protect any wealth if the Bitcoin market got back into that price zone. Okay. Now, as far as the longer term picture goes for Bitcoin, what I would really like to see, and what I think we probably will see, is continuation of just a slow death that needs to kind of happen. I think it needs to get under 10,000. People just need to stop talking about it. And if you're still looking to buy crypto, please leave me a comment down below. Actually, if you are, that'd be kind of nice to hear from you guys. But I am not really one to think that this is going to be a quick fix, right? We just saw FTX go bankrupt. They were the third largest crypto exchange out there. And it's something that it's going to continue to percolate. We're going to find out who the real players are, really who the real coins are, right? There's a lot of fake ones, right? And that's why I got out of crypto a few years back, even though I've kind of continued to pay attention to it. But once we broke this exponential trend line, there was nothing good going to come on this massive market correction. It's basically been needing for a long time. The more people that are still thinking, hey, we should be buying this up, this is by the dip opportunity, there's really no value that Bitcoin serves, right? Bitcoin and the crypto markets in general, I know we talked like Bitcoin, but this is a crypto market higher level than just Bitcoin. They need to figure out their utility. Like, what purpose do they serve? And are they a currency, or are they a speculative bubble play, right? The more that they can get utilized, actual transactions and that kind of stuff, the better it'll be in the long run. But you definitely need to get a lot of the bad players out of the system, and then provide security and reliability and utility. Right? They need to provide a lot of those kind of things in the crypto space. And for people to still be calling for like $100,000, $1 million Bitcoin or whatever over the next year or two or whatever, I think that's a little bit irresponsible. And it's those people that once they are flushed out and out of the system, out of Bitcoin, out of crypto, I think that will be probably the most worthwhile thing for crypto. Right? You get rid of hugely speculative price projections and just get back to just making business and financial sense. You know, like, are you better than fiat currency? And if you can say you are, then I think there will be a spot for crypto. Crypto shouldn't be increasing at gains like this. Like, there's no reason for it to. And it just needs to find its place in the financial system as far as a reliable financial currency, right? If it's a currency, it's supposed to be stable. Nothing about this price chart says stability to me. So that's about all I want to say about crypto, but I just have no interest to be involved in it until we just see a lot of people say, yeah, you know, I'm done with crypto. And especially all those bulls that call for crazy, insane price targets of like 100,000, 1 million, whatever price target they are. You know, they just need to probably just go away. And once those people go away, then finally, and once you all go away, once everybody stops buying it and it's still around, then that'll probably be the best time to buy it. So that is my take on the crypto market. But yeah, I have no interest to be involved for now. Okay, so let's get back to looking at the S&P 500. And this is a 6-month chart. And I just want to reiterate kind of why I'm bearish on the market. Okay, it's nothing to do with like I'm not bullish on society or whatever. I think we have a great society, honestly, but a lot of it has to do with this blue line that we got right here. This blue line is the long-term exponential trend line that goes back to when we came off the gold standard. Okay, if we go back further than that, you see another blue trend line. This is the blue trend line of the S&P 500 before the gold standard, okay? So after gold standard, before gold standard. And obviously you can see, wow, that's a lot higher of a growth rate than we had pre-1933 growth rate, right? The light green line, this is just the long-term growth rate to take into account all of it. But really, we should probably never come back to that line. mostly due to the fact that exponential growth line is obviously going to continue to grow at a much higher clip than taking into account the pre-1933 gold standard, right? So where, oh where is this line currently located? Well, if we go down to a shorter term time frame, it is currently right around I'd say 3,000 on the SPX, so around 3,000 on the S&P 500 or 300 on the SPY, something like that. Now I'm going to go back to the SPY. So this green line that we have here, this thicker green line, this is the long-term exponential trend line. Okay, so when we get down to that point in time where we ever hit it again, currently it's a little bit below 320. Are we going to bounce directly off of it? Well, we didn't the last time when in the tech bubble. We got like a little bit below it. But what's really interesting is this thinner green line that we have right here, right down here. And that thinner green line, if I scroll out here, connects in with the 2009 bottom and the 2020 bottom that we had, okay? So it doesn't really matter which one we kind of hit. Somewhere down in this zone will probably be the bottom. You know, do we roll a little bit lower than the blue box zone? The blue boxes have been pretty close to being right for most of the year. You know, I don't know. Do we wick below it? Sure. Why not? Why not wick below it, go down to 390, freak everybody out, it's the end of the world, Armageddon, all that stuff. But, you know, we don't know for sure. We don't know for sure. We'll see what happens in the future, see what policy holders kind of have and what they do with the economy and that kind of stuff. But I would imagine getting back down to some of these more normal price levels where this solid green line is makes a lot of sense to me. But I don't think we will be below this long-term exponential trend line very long. I would imagine we probably do come below it, probably do find some bottoms in here, probably in the lower 300s, and then maybe later on in 2023, probably even wick below it, maybe go down, get below 300, and that'd probably be the bottom. But somewhere in this next market move, I would imagine we probably do make a run down to the lower 300 level, get below 320, probably easily in my opinion. We probably easily get below 320, and then yeah, that would be just a solid time to be buying. Solid time to be buying. It's not one to be bearish down here. I would not recommend being bearish down here. That would be the absolute worst time to be bearish. This is like long-term buying opportunities, long-term portfolio stuff. No quick option trades, that kind of stuff. You never know what way the market's going to flick one way or another when we get down into those zones. So one last thing I want to start doing on the channel is the first Friday of every new month, I want to basically show off basically my performance, kind of how I've been doing, especially over the past month. This is something I track every week. I track this every week. I compare it to the SPY, kind of see how I've been doing. Obviously, you see last week took quite a bit of a hit, right? As I am pretty bearish on the market, and we saw a nice little uptick on the market over the week, last Wednesday or whatever. I saw a little bit better positivity this week as the market came back, especially that Monday, Tuesday. So last week I was doing a lot of put buying. You know, we saw extremely elevated levels for what I thought on the trend that we were on, and it's just one that, you know, if you are a believer of the analysis you do, then you need to, you know, put your money where your mouth is, kind of. So I want you to kind of understand what you need to be doing on the regular, and one of those things is tracking your performance, whether it's a trade journal or whatever. You need to be tracking your performance. That way you can see what's been working and what hasn't been working, right? Because if you also look, I had a period of bad times, right? There was a lot of things I had to adjust the way and the timeline of what I was using for my options. I had to go farther out in time. I had to give myself a little bit more of a cushion to see how the market was going to work out. And, you know, after you make some adjustments, then you can get into a situation that makes you more profitable, right? It's not about making money as a trader or investor. It's about optimizing to get the most out of your money. I definitely like to show you ways to maximize your return, maximize your trading, But really, if you're not tracking your trades, you're not tracking your journals, you're not figuring out how certain setups are working out for you and your timeline, because everybody's got different timelines. Some people work during the day, some people don't. So, certain trades maybe work better for you than others. So yeah, definitely be tracking your trade history and that kind of stuff, and do your analysis review. You can do it every month, you can do it every week, but you need to be tracking your trades so that you can understand where you are performing the best at. Okay. All right, so let's figure out what the game plan is for this next week, okay? So I don't expect a massive breakdown in the market this week. I was really kind of interested to see, this evening star reversal pattern kind of play out here between 2 weeks ago, last week, and this week, and then we actually closing below the past 3 weeks opens. It's just kind of interesting to see that play out this week. We're looking at that on the live stream, and it actually happened. I didn't really think it would happen, but that last 15 minutes of price action today, or really the last 45 minutes, was really pretty bearish. So yeah, let's just get a game plan then for this next week. And I'll be pretty honest, I wouldn't doubt it if we started off this next week and we sold down and we checked in to 390. I think doing that on Monday would make a lot of sense to me. And then we get bought up as we go in, and probably end the day with a lower wick. And then Tuesday, I think we'll probably just bounce off CPI, and then we'll probably start to make our run up to about that 400 level. Maybe we hit it Tuesday, maybe we hit it Wednesday. I don't know. I don't know if we hit it Tuesday, but depends on maybe the CPI numbers. But if we hit 400, I would be looking to be bearish there. I would not be looking to be long unless we really close above that 200 moving average, that kind of stuff. And then I would expect a slow kind of grind back down to end out the week. I'm not expecting a huge break above the 400 level or a huge breakdown of the 390 level. And then if we don't break above 400 or below 390, the following week, the week right before Christmas, I would expect us to just kind of chop in the lower 390s probably for most of the week, maybe start to break down then 2 weeks out as get below 390, and then possibly towards the end of the year after Christmas start to roll lower going into the year end, right? Because a lot of people I've seen talking about the typical December is we rally the beginning of it, we have a pullback, and then we go bullish to end out the year, right? That's typically the normal pattern that kind of plays out. Well, this is not a typical year, right? We just saw December sell off, and what if we bounce into the 400 level, and then we have a slow decline then into year end? So it'll be interesting to see which way it plays out. This is not a normal year. It's an abnormal year. We've been down over 20% in the market this year. So this probably not going to play out, right? Because we've already seen the market get kind of bearish in the beginning of this month. And, it's just not a normal year. It's just not a normal year. So normal year statistics don't matter in this marketplace at all. So Alpha Hunters, that's about all I got. That's kind of what my game plan is. I'm not expecting a massive break above 400 or below 390 this week. Maybe we get down there and we wick below it, but I think we'll probably come back because we haven't even really tested the 390 level, and I'd imagine there's probably a lot of bulls sitting there. As the 400 level, I'd imagine there's a lot of bears sitting up in this zone too. So I really doubt we break either one this week, and probably start to maybe break them in 2 weeks or maybe the end of the year, into December, one way or the other, probably in the bearish direction going below 390. So Alpha Hunters, y'all have a great weekend. Take care, and good luck to y'all next week. Take care, Alpha Hunters.